Yeah, good morning, everyone. So we saw US market a bit positive on Friday, but today morning the futures are lower, and even Asian markets are also indicating lower trend. This is mainly because of the inflation figure which are expected tomorrow in the US, which is keeping the market under check, and market is seeing some corrections in last few days. Uh, Today even the India also will come up with CPI inflation figure, which is expected at around 6% versus last quarter 5.7%, so marginally higher than the last month. Uh, but the key thing to watch is definitely the inflations, and apart from that, even the commodity side also. Though the oil is up by around $1 as compared to Friday same time, but the other commodities like iron ore and steels are down. Iron ore is down by around 1%, and steel is down by around 0.5% in China today morning. So overall, seems more of a sideway to downtrend in today's trade. I'll request technical team to take up from here.
Yeah, thank you, sir. Good morning, all of you. Today we expect flattish note open, but Nifty trading with the range upside range around 17,920 and downside range around 17,770. If Nifty break this level either side, then we expect it proper guided trend that Nifty going towards if Nifty break 770 1770, then we expect the further sell off towards 17,580 and 400 at downside. And Nifty managed to sustain close above 17,920 and 17,970. Then we expect further rally. But today's we watched closely in start of the week. If Nifty break the 17,770, then we expect the selling, and if Nifty not sustain above this level till 17,920 and above, then we saw that upper range is 17,970 and 840, 18,840. Bank Nifty also trading near support zone 41. 400 and 300 is immediate support for Bank Nifty. If Nifty, Bank Nifty break that level, then we expect further sell up towards 41,000 and 40,700 at downside. Upside 41,800 first immediate resistance for Bank Nifty. Above that, then we see, towards the 42,200, 42,400 in upside. Nifty Finance also trading the crucial level near the crucial support zone. That is comes around 18,500, below 18,500 and 18,470 below, then 18,400 and 18,370 at downside, and upside 18,570 is a specific Apollo Hospital looks positive at current level. We saw that it's trading above the important levels, and last 4 to 5 trading sessions managed to close above the previous close, and weekly close also trading above the last 3 to 4 weeks. Do we expect positive side in Apollo Hospital till upside 4,600, 4,700? Support place around downside 4350. Tata still looks weak at current level. We saw that last week inflation, Tata Metal Pack and Tata Steel also closed below the important support zone, that is 110. Below that level, 100 and 400 next immediate support for Tata Steel. Chula Finance also looks weak, already trading in overbought, and we saw that Friday popular booking. So we expect this popular booking till 760 and 758 downside. Upside resistance place around 790. And Hindalco looks weak at current level. Downside next immediate support place around 425, below 425, then next immediate support 420, that is 200 DMA. and then 410 and upside resistance place around 445. That's it for technical derivative guys.
Yeah, thank you, Vikas. See, on the derivative front, yeah, nothing much to add. The data is still largely sideways. Good thing is the VIX has come down below 15 levels. It is now near the 12.5 odd level. So, with this VIX, don't think much selling should be expected. However, we should remain range bound. Once we do witness some breakout above 18,000 levels, you will see some more buying coming in. At this point, the range is about 18,000 on the upside and about 17,700 and 17,500 on the downside with these two support areas. PCR and open interest are at comfortable levels as well, so nothing much to worry. um this market should be selective stock specific market only at this point of time. Don't think much upside or downside should come in. From the stock specific front, again, there is no real theme that is coming out. IT sector as a whole continues to look good, and they should continue to witness further buying in the coming days. So look out for the same. Yeah, other than that, nothing really coming out. So yeah, that's it from my side. I'd like to ask the fundamental team to take over, please.
Good morning. Mahindra and Mahindra result was above expectation. Revenue grew 42% year on year. EBITDA margin came at 13% versus expectation of 12.8, marginally higher, and normal run rate was at 12%. M&M has been consistently gaining market share in the UV segment, with its revenue market share going up by 500 basis points over last 1 year. Management has alluded to continuing momentum in the auto segment, led by new launches of Scorpio Electric XUV 400 and XUV 700. We are building in 23% volume CAGR in the auto segment over FY22 to 25. Similarly, for the tractor segment, the volume expectation is around 6% over FY22 to 25. Due to superior capital allocation, we are seeing ROE doubling from 9% in FY21 to almost 18% in FY24, and thus we expect the stock to continue to re-rate. We are positive on M&M. Titagarh Wagon result has improved. Revenue was up by 26% sequentially, 100% year on year. Similarly, EBITDA also increased 32% sequentially, 70% year on year, with EBITDA margin of around 9.5%. We are seeing quarter-on-quarter growth in the sales since last few quarters, as the company's order book is now fully booked for next 3 years from wagon orders. And the company is struggling with capacity. Actually, last quarter, the capacity was at 600 wagons per month. That has increased to 700 wagons. And for next 2-3 quarters, over next 2-3 quarters, it will further increase to 800 and 900 wagons per month. And after that, we expect it to stabilize. So we are bullish on the stock. But in terms of the upside, it can be limited from here on based on current order book, which is kind of factored in the stock. But incremental upside can come if the company bags a big order from Vande Bharat, where it has bidded in joint venture with BHEL. So if the company were to bag that big order, then there will be good upside from even this level. But overall, we remain positive with good earnings visibility for next 3-4 years. KFin Technologies, which is a company similar to CAMS in the register and transfer agent business. Result has improved. Revenue grew 5% sequentially. EBITDA grew 14% sequentially due to operating leverage. In comparison, CAM's revenue and EBITDA were flattish for the sequential quarter. And on year-on-year basis, if we see, the company has gained market share by 1% to 31.7%, and around 64-65% remains with CAMS. But in terms of growth, we are seeing that KFin is outperforming CAMS. So we are positive on KFin Technologies. PB Fintech, that is Policy Bazaar, result is ahead of expectation. Revenue grew 6% sequentially, 66% year on year. EBITDA loss also has come down to 133 crores versus expectation of a loss of 163 crores. Similarly, PAT losses also come at 87 crores versus expectation of 120 crore loss. So because of consistent reduction in losses and company's guidance that they will become profitable soon, we are positive on PB Fintech. City Union Bank result is below expectation. This is the only bank where we have seen the slippage ratio increasing steeply from 2.5% last quarter to 4.1%. And hence gross NPA has also increased by 30 basis points to 4.6%. Restructure book, though, has reduced because we assume that some of it would have slipped this quarter, but still overall restructured book remains high at 4%. So there is some risk that even coming quarters can be, have higher slippage. Credit cost was also higher at 2.1% versus expectation of 1.4%. And because of this, ROA came down from normal level of 1.6, 1.7% for this bank to 1.3% this quarter. So overall, from near-term point of view, we are negative on City Union Bank, and also valuation remains high at 2 times price to book. If any client is holding this bank, we would suggest them to switch to other decent private banks like DCB or Karur Vysya Bank. Fusion Microfinance result has improved. Loan book grew strongly 45% year on year, 8% quarter on quarter. GNPA, net NPA were stable at 3.7 and 1%. Other metrics like stage 2 and restructured book also continue to improve and are at negligible levels, one of the best in the industry, very close to Credit Access Grameen. ROA, ROE are also similar to Credit Access at 4.5% and 18%. Whereas if you look at valuation, the stock is trading at 1.9 times, whereas Credit Access is trading at 3.3 times. So we don't think that such a big difference in valuation should exist because both the companies have very similar metrics. So we expect this gap to close down and expect Fusion Microfinance to outperform in future. And we remain positive. So that's it from my side. Thank you.
Good morning. Himmat Singh said has posted an improved set of numbers for the quarter with revenue growing by 20.1% QOQ to 736 crore, which led to higher profitability to the company. EBITDA came at 103 crores versus QOQ of 26 crores. Stock is trading at a PE of 4.8 times FY24 EPS. RateGain Travel Technologies also has posted improved set of numbers for the quarter with revenue growing by 11% QOQ and around 40% year on year to 138 crore. EBITDA margins has also improved to 16.6% versus QOQ of 14.1%. Stock is trading at 43.1 times FY24 EPS. Thank you.
Good morning. Avanti Feeds reported result, and the result has improved in terms of margins. The revenue grew by 3.1% on YOY basis, while there was a degrowth in a QOQ basis by 16.6%, and the revenue reported at 1,103 crore. So there was largely a degrowth in shrimp feed revenue on a sequential basis by 15.6% QOQ, and it grew by 6% on YOY basis. Overall, EBITDA margin improved at 7.3%. The shrimp feed segment margin has improved on YOY basis by 285 basis points, while 100 basis points on QOQ basis. The stock is trading at a PE of 19.1 times to TTM EPS. Galaxy Surfactants Limited result was above expectation. The revenue grew by 16.3% YOY at rupees 1,080 crore versus the expectation of 1,105 crore. The overall volume grew for the quarter by 0.6% YOY and 2.1% on YOY basis for 9-month FY23. The volume for performance surfactants grew by 5.9% on YOY basis, while specialty care products grew by 88.7% YOY basis. In terms of regional performance, Indian market grew by 12.2% on a YOY basis, while AMET and rest of the world has observed degrowth. The EBITDA margin improved on both YOY and sequential basis at 14.3%. Versus expectation of 10.3%. EBITDA per ton for the quarter stood at rupees 27,037 rupees with a 100% YY growth. The stock is trading at a PE of 23.7 times to FY24 EPS, and the outlook is neutral over the near term due to challenges in AMET and other regions, but looks positive over the long term. NOCL Limited result was below expectation. The revenue degrew by 16% on both YOY and QOQ basis at rupees 326 crore versus the expectation of 361 crore. On account of robust volume. So there was a robust volume growth of 7 to 8% in domestic market. However, there was a degrowth in latex market, which has impacted overall export market volume performance. The EBITDA margin came at 11.5% versus the expectation of 15.3%. There was a flat growth in EBITDA per kg also. The management suggests debottlenecking projects to be completed by Q4 FY24, while new capex plan is yet to be decided based on the global macro dynamics. Chemplast Sanmar Limited result was in line with expectation. The revenue degrew by 18.1% YOY at rupees 1,189 crore. Here the prices of paste PVC and suspension PVC has observed uptrend in prices from December 2022 after witnessing the continuous fall from April 2022. This was largely driven by the robust domestic demand and the reopening of China. EBITDA margin reported at 6.6% versus expectation of 6.9%. And there was a recovery in PVC prices backed by healthy demand, and the management expects Q4 FY23 performance to improve. The stock is trading at a PE of 13.8 times to FY24 EPS, and the outlook is neutral on the stock. Thank you.
Yeah, apart from this, a few more stocks like Godavari Power reported numbers, and the numbers were a bit below expectation, and that was expected as the pellet prices corrected in the previous quarters, and company had a contract at a lower price, which were got executed even though the export ban was removed in the November. Going forward from here, company will be exporting at current prices, which will be much higher than the price at which they had exported in the last quarter. So realization will be much better, and the benefit of the same will be coming in the next quarter. So though the result is declining, but the outlook seems positive from here. Then Nelco came out with numbers, and the numbers were quite good. That was mainly driven by lower power and fuel cost and higher sales of aluminum than alumina, where the realization was higher. But going forward from here, the prices of aluminum has corrected since January. So the next coming quarter may not be like this and may see some declining trend from here. So outlook is neutral for National Aluminium. Then MSTC came up with the numbers, and the numbers were declining, mainly on account of lower scrap prices, which resulted into lower income for the company, as 50% of the revenue comes from the auction of scrap on their volume, and which is likely to improve in the coming quarter. As the scrap prices has also moved up in the current quarter, and also towards the end the volumes are generally high for the company and for the auction, so that can also support the prices, and company has declared interim dividend of 6.5 rupees, so that can also support the prices. Outlook from a long-term perspective for MSTC continue to remain positive, considering their the platform business and the valuations which it commands. So outlook continue to remain positive. Apart from that, they got a JV with Mahindra for recycling of the scrappage vehicle, which is expanding very well in the recent past because of the government regulation push, and the JV is likely to increase the number of the scrappage centers, so from currently around 7-8 to almost around 25 in next 1 year. So outlook for MSTC continue to remain positive. So that's all from us. And I'll request commodity team to take up from here.
Yes, thank you, sir. Good morning, everyone. In today's session, we might witness some pullback, and then after that, again, some selling pressure might be witnessed. So, all in all, gold if sustains above 56,700 for a pullback, one can buy with a signal of 56,500. But however, we recommend to sell around 56,900 to 57,000 and maintain a stop loss of 57,200. Prices are expected to test 56,500 to 56,300 on lower end. Silver also has reached the support area of 67,300. So any pullback till 67,100, one should sell, and we expect prices to test 66,700 to 500, 65,500. Crude oil, we expect prices to rise, and it is recommended to buy around 6,500 to 6,480 and maintain a stop loss of 6,400. Prices are expected to test 6,600 to 6,650. In natural gas, some reversal is expected, and prices are expected to test 230 to 235, and if prices are sustaining 212 levels, then one should expect fresh buying, or else one should wait for 205 levels and again enter along with a stop loss of 195. In metal front, copper, we expect a pullback till 770, and again then sell-off should be witnessed. So all in all, we expect 760, 755 levels on downside. So maintain a stop loss of 776. In zinc, we expect prices to test 265. So selling around 272 is recommended with a stop loss of 274. Similarly, aluminum also prices are expected to test 214 to 213 levels. So selling around 216.50 is recommended with a stop loss of 218. That's it from me. I'll ask Riya to take off from here.
Good morning, everyone. So on the currency front, we are seeing a dollar index ticking up towards 104 levels, but the bullish leg of dollar index should be limited or should top out at around 105. That is the max upside that we are seeing on the dollar index as of now. This has translated into a weak Indian rupee. The Indian rupee has opened at around 82.68 and trading at around 82.75. 82.98 still proves to be a very strong resistance, and if it gives a breakout to that and trades above that, then only we could see a higher levels of around 83.35, 83.50. Until then, I think there could be a small long that could be done for a target of 82.89, 82.98. As far as other pair goes, JPY INR will continue to remain under pressure. You could see it falling towards 82.76. Once it gives a breakout to that, the bearish leg will extend towards 82.50, 82.35. There we can take a good long sell position. For Euro INR, the support is placed at 88.20. A consolidation to a small pullback will be seen into the pair. Thus, the pair will trade within the levels of 82.45, 82.25 in today's session. Same with the pound also, there is indecisiveness that could be seen into the pair. It has opened with a gap down, but after that, it could see a sideways consolidation momentum within the levels of 99.89 and 99.70. So that's all on the currency front. Thank you.